Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of September 16th through September 20th, where we'll try to help you make money trading around the September Federal Reserve interest rate decision, regardless of what that may be. So again, thank you for joining us for part one of our weekly trading game plan for September 16th through September 20th. And let's talk about making money around the September Federal Reserve interest rate decision. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for September 16th through September 20th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. Our notes Google documents contain links to bonus videos, the tools and resources we use to conduct our market analysis, come up with our trading strategies, our trade ideas. We keep all of our notes documents in a publicly accessible Google Drive folder so you can refer back to the notes for this week as well as previous weeks. And again, you can find a direct link to that publicly accessible Google Drive folder in the description box below. Welcome, Gerald Fitz, Carmen. Thank you for joining us today. Hope you're doing well. So firstly, we'll take a look at how the markets ended up on Friday, the main page of FinBiz. So we'll see we had a pretty strong rally on Friday. On the end of this week, we had a pretty strong rally. So all the indices were up. Dow up 0.72%, NASDAQ up 0.65%. S&P up 0.5%. You can see it was a very broad rally. We had almost 80% advancing, only 17% declining. Got almost 94% new highs, only 6% new lows. We've got about 65% above their daily 50-day moving average, only 35% below, and also 65% above their 200-day, only 35% below. So again, a pretty bullish day on Friday. You see again, pretty broad rally. The Mag 7 really weren't driving this. So again, we've been talking about that maybe the reign of the Mag 7's over. We're getting a broader rally. The only weakness was in some healthcare, Adobe, some financials, Boeing, little industrials, etc. So if we quickly look at some of the news, again, we're talking about the Fed interest rate cut or Fed interest rate decision and the bets, the probabilities of 25 versus 50, etc. So you can see the bets on a bigger rate cut just won't die. Stakes are high. So again, we'll talk about the risks of potential volatility. Inflation's cooling. So why is orange juice so expensive? Investors ramp up bets on jumbo rate cut. Again, we'll look at those probabilities. Small market steel limelight. We'll see the bounce in the Russell. And S&P and NASDAQ rally Friday to cap the best week in 2024. So again, overall very bullish week. Welcome LinkedIn to Ricky Khan. Thank you for joining us today. Hope you all had a great trading week. So oil broke down to near 65. It's been trying to retest that resistance at 70, as we'll see. It's been rejecting so far. So we'll see if we get a further bounce down in oil or if it breaks that 70 resistance level, bounces back up. Natural gas been testing a resistance at about 240, getting rejected, bouncing back down. We saw gold consolidated for quite a while. It finally broke out and made a real run up over 2,600. So a real exuberant run in gold. We'll also see that in silver. See right now the indices, the futures on the indices are all pointing down except for the Russell, so strongly up. So again, rate cuts, good for small caps. And again, we'll talk about strategies to play either way of the Fed interest rate decision. Saw bond yields decline, shorter end of the curve more so than the longer end, but the 30 years now finally closed below 4%. I hear the whole bond yield curve is now uninverted, so bond prices up, and we'll see that in the futures as well. Bitcoin had made a bounced pretty strongly up to 60. Looks like it retraced a little bit. And we'll also see it looks like possibly that yen carry trade unravel continued. We'll see that again in the futures. Welcome Walter Lyons, Takutsu, Say, trader also known as Easy Mike. Thank you for joining us today. Hope you all are doing well. Let's look at a breakdown of the major indices and then also the technology components. Again, just a quick reminder, you can find these links to these screeners in our notes documents and also in the screener sheets in our ETFs and watch list Google Sheets. So if we look at the major indices, see the Dow's been very strong. It keeps testing that upper trend line. So again, Dow's been generally very strong. It's up above its moving average. So a lot of strength in the Dow. Probably make a new all-time high again. Russell had a strong bounce. So again, rate cuts good for small caps. Regain that shorter term moving average. Looks like it's going to test that upper trend line. So we'll probably see a bounce further up in the Russell, maybe test the the August high again. Not so much the Qs, although there's been a lot of focus on technology. It did bounce off that lower trend line, regained its short-term moving average, found resistance at that upper trend line, but so far it's been making lower highs. So again, we see a narrowing wedge, but again, probably hold that shorter term moving average. SPY's been pretty strong, again, testing its August highs, broke above that resistance at pivot point, up above its moving average. So we'll see if we get a little bit of a retracement, probably oscillate right around that August high. Welcome Fairchild, thank you for joining us today. Hope you had a great trading week and are doing well. So if we look at a breakdown of the technology components, see ARC had a pretty strong bounce off its resistance, regained its shorter trend line, actually broke above that upper trend line, so big bounce in ARC. Again, growth stocks benefit from a lot of those are money losing growth stocks, so their valuation benefits from rate cuts. FANGs, again, Magnificent Seven, not quite as strong, did have a good rebound off of that longer term moving average. Probably got some resistance from the shorter term moving average. So again, Magnificent Seven, the FANG stocks are not really driving the market as they were previously. Again, maybe the reign of the Magnificent Seven is over. Biotechs, good bounce, again, sensitive to rate cuts, so they benefit from rate cuts. So it's got a resistance from that upper trend line, probably see some oscillation in that. Semiconductors not been as strong, saw a lot of volatility in NVIDIA, but the overall sector got a double bottom there, did bounce up significantly below the moving averages. Short-term moving average looks like we might get again a death cross on the semiconductors. So again, a pretty weak sector right now within overall technology. The TQs, just the NASDAQ, leveraged on the NASDAQ. And the broader technology, again, pretty strong rebound. So that shows us the broader rebound in the markets. Broke above the longer term moving average, slightly above that upper trend line. Probably get some resistance from the shorter term trend line as well. So again, broad bounce in technology, but again, technology is not the strongest sector right now. We saw some broadening, so we'll look at that in a second as well. Okay, let me grab a quick drink and we'll break down the sectors, the industries, and see what kind of opportunities we can find in terms of sector rotations. Okay, if we look at the sectors, the groups in FinBiz on Friday, kind of an interesting mixture. We'll see we got this bounce back in basic materials, so strong sector rotation back into basic materials that had been lagging. Utilities, again, will benefit from rate cuts. Communication services strong. Real estate bounced on lower bond yields, lower mortgage rates. Technology kind of in the middle. The weakest sectors on Friday, financials, energy, and healthcare. The week, though, technology was the strongest, had a strong rebound. Consumer cyclical, again, Mag 7. But again, we see that rebound in basic materials. Again, energy and financials, the weakest. For the month, real estate, again, continues to rebound on dropping bond yields, dropping mortgage rates. Also, utilities, very strong, cyclicals, and defensive, so kind of a mixture of defensives and again rate cut. Those sectors that benefit from rate cuts. Energy very weak. Saw somebody commenting on the oscillation in oil. We'll talk about that a little bit further in the futures as well. For the quarter, again, real estate, utilities, and defensives very strong. So if we look at the industries, and we'll see this strong rebound on Friday in a lot of the materials, precious metals. So silver, strong rebound we'll see, broke above 31, I believe. Coal, among the energies, aluminum had been lagging significantly. See the utilities, real estate, steel had a rebound. Some REITs, gold, again, bounced up over 2,600, strong rally in gold. A lot of REITs positive. Uranium had a pullback, so it had a bounce. There was some positive news on uranium. Russia, I guess, is thinking about curtailing exports of uranium. So earlier in the week, you can see it had a 10% bounce, somewhat of a pullback on Friday. So we'll see if that trend up in uranium continues. Again, strong resurgence in silver. Semiconductors did have a bounce this week. Gold, again, strong. Solar, again, benefits from rate cuts. Also, the political situation, coal, and materials, strong bounce, steel. So, and again, the only negatives, oil. Again, we saw oil break down below 70, down to around 65. So oil companies negative, and I guess insurance. So for the month, REITs, real estate, materials, again. And oil, coal is pretty negative for the month. So again, we'll see if that rotation continues, where again, technology not really driving. See that rotation back into materials, some defensives. Again, those that benefit from rate cuts, real estate, utilities, etc. Okay, next we'll look at the economic data that we got this week, and then we'll also look at the economic calendar for next week. Again, both prior to and going into the September Federal Reserve interest rate decision. So just a quick reminder, as this important economic data comes out, and important economic news, I try to capture it and post it in our Discord and the Surf the Markets channel in our Discord as quickly as possible. Our Discord's free to join. You can find a free invite in the notes in the description box below. Just quick show you where that is. So here's the Surf the Markets channel in our Discord. As the important economic data comes out, try to capture a snapshot from investing.com, the raw data, etc. Post that in the Surf the Markets channel in our Discord. Also, natural gas and oil inventory, sometimes from FinBiz, or again, important economic news. So here we see the ECB already has cut their interest rate by 25 basis points. So ECB is leading the US, the FOMC, in terms of rate cuts. So again, as the important economic news comes out, you can get it in near real time in our Surf the Markets channel in our Discord. So, we'd love to have you join and actively participate in our Discord. So quickly, just some highlights from the economic data from last week. So we can see Monday, Tuesday, not much. Wednesday, again, mortgage rates are dropping, so that benefits real estate, housing, etc. And we got core CPI data, mostly in line. So again, important inflation indicator for the Fed decision. Again, pretty much in line. Year on year was flat. The month on month was higher than expected, 0.3 versus 0.2, but the markets, in my humble opinion, didn't seem to react very much to that higher than expected month on month CPI. So we continued, a positive run through the end of the week. So again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. Got real earnings were positive. Again, the year-on-year CPI all in line. So again, market seemed to take that as positive, and rally continued. And Thursday, we got PPI, so producer inflation, supplier inflation. Again, pretty much in line. Year on year was a little below expectations, but the August monthly was a little higher than expectations. Also, ex-food transport a little bit higher for August, but again, the market didn't seem to negatively react to that. Month on month, a little higher than expected. Year on year, a little lower. So again, the comparisons from last year, since inflation was much higher, the year-on-year comparisons are coming down, but the month-on-month isn't really moving. So it looks like inflation's pretty stagnant. So we'll talk further about what that means in terms of probabilities for a larger versus smaller Fed interest rate cut. Also, we got jobless claims. So we got initial claims were a little higher than expected, and continuing claims pretty much in line. So again, the markets really didn't take that as a significant negative, even though, again, initial claims are just slowly creeping up. So the job market, in my humble opinion, it's stayed pretty resilient. We're seeing very slow deterioration in the job market. Friday, we got Michigan consumer sentiment information, and that was kind of interesting as well, that the one-year inflation expectations went down less than expected, so 2.7 versus 2.8% expected, but the 5-year longer term went up to 3.1 versus 3, so the consumer is expecting, pretty sticky inflation above, 3% over the long term. In my humble opinion, again, that's kind of a negative for the Fed. Says, the consumer doesn't believe they're going to get down to their target, but we see the sentiment improved a little bit, consumer expectations improved a little bit, and current conditions improved a little bit. So shorter term, the consumer seems to be feeling a little bit better, but longer term, they expect inflation to continue at a higher rate than the Fed would like to see. So in a second, we'll jump over to the all the rest of the economic data and investing.com. But just the highlights for the data for next week is Wednesday is the September Federal Reserve interest rate decision. 2 o'clock we'll get their decision. We'll look at the probabilities of what the market's currently expecting in terms of cuts. We'll also get their dot plot, their strategic economic projections. So that'll show us the trend, their estimated trend for rate cuts going forward. And then at 2:30, we'll get the Jay Powell press conference. So again, a lot of focus will be on this Wednesday. My humble opinion, we'll see the economic data in a second, and I'll further comment on that. Just a reminder that Friday is also September options expiration and quad witching day. So we've got all the options and futures all expiring on this Friday. So uh, several events potentially causing increased volatility throughout this week. And again, we'll look at that as well. So if we look quickly at the rest of the economic data from last week, see wholesale inventories a little below. Consumer credit, again, growing significantly. So more debt, more potential defaults. And again, we heard several factors that were negatively impacting the financial sector. So we can talk about ways you could play that. Crude oil stocks dropped, but again, we saw the price of oil drop. Mortgage rates down, we talked about that. Core CPI. Crude oil inventories up just slightly, less than expected, but again, we still saw the price of oil pretty much drop. PPI, we talked about PPI and jobless claims, natural gas storage up, but less than expected. And again, we saw the price of natural gas had trended up, hit that resistance, kind of bounced back down. Export-import prices down. Fed balance sheet not really winding down very rapidly. So let's look at the rest of the data for next week. So not much Monday. Tuesday, we've also got retail sales. So that could have a significant impact. So some volatility. It's expected to be negative for August. So again, we'll see if that's showing a slowing in the consumer on Tuesday. And Wednesday, we get mortgage, housing. And then we get, again, the Fed interest rate decision, their projections going forward for the next several years, the dot plot. Again, in my humble opinion, again, I think not only will the degree of interest rate cuts be important, but also the trajectory going forward. So we'll see what their projections are for further rate cuts. Again, we'll talk about the probabilities when we get to our strategy. So then Thursday, we get jobless claims data, but this is all coming after the Fed decision. So this will be input into the probabilities for a November cut, existing home sales, natural gas storage, etc. And then also Baker Hughes rig counts. And go back and look at the rig counts from last week as well, real quickly. So if I look at the rig count from Friday, so we got a little bit of an increase in rig count on Friday and total rig count. So that's a little bit surprising given the breakdown in oil prices. Still got some earnings reports, but season pretty much winding down, and then we'll ramp up for the next season. So again, you can find the whole list of who's still left to report earnings. Looks like we've got some gold companies, Eaton, some biotechs. Again, I think the vast majority of the General Mills, so some consumer defensives, Lennar, some home builders. So again, you can see the whole list in investing.com, and I'll show you where you can see a shorter list in Webull as well. And we talked about the Fed interest rate decision for September. Again, we get a dot plot. You can hear our strategies on how to make money trading around earnings. Earnings definitely matter, as well as guidance. And again, we see even a slight miss. So we saw Adobe miss just slightly, got punished pretty severely. So any kind of miss, any downward trajectory in guidance, we saw like Dollar Tree and Dollar General guiding down. They got hit pretty hard. So again, all of that definitely matters. So I'm gonna grab a quick drink and we'll go look at the market screen in Webull, check the chat quickly. Just a quick reminder, if you're not already using Webull, you can get up to 75 free fractional shares of stock and a bonus 2% interest rate for a total of 7% interest rate for 30 days on your idle cash. If you deposit 25K or more, you get 75 free fractional shares of stock and a 7% interest rate. Less than 25K, you get 20 free fractional shares of stock, still get that 7% interest rate. Each fractional share is worth $3,000 to $3,000. If you'd use our affiliate link in the description box below, we would greatly appreciate it. And you can also help support our BeachBum trading community, which we greatly appreciate. Welcome, MD. Thank you for joining us. Hope you had a great trading week and are doing well. So I'm using the market screen in the online browser version of Webull. You can see in the histogram of decliners and advancers, we had a pretty broad rally, but the percentage of advancement on Friday was very small. So again, very broad, very small rally on Friday. Number of advancers very small, and the number and degree also very small, had just very few significant advancements. So again, a broad but somewhat shallow rally on Friday. Thought this net inflow again was interesting. Had positive inflows in both the NASDAQ and the NYSE through the vast majority of the day. Then the NASDAQ went negative late in the day at power hour, 3 o'clock went negative. NYSE eventually went negative at the close, and then we saw a significant dump in the NASDAQ at the close. So probably, in my humble opinion, probably some profit taking in technology in the NASDAQ towards the close, but a pretty steady melt up there earlier in the day. Just a reminder, you can see the very near-term earnings calendar here in the calendar section in the market screen in Webull. So again, you can see who's reporting in the very near term. Keep an eye on that, how that might impact your trading decisions, your existing positions, etc. You can also see dividend splits, etc. We look at the best performing industries for the week. So semiconductors pretty positive, uranium very positive, biotech pretty positive, retail positive, metals and mining, construction, finance, education kind of split, software mostly positive, defensive. So we've got a pretty broad swath of positivity, renewable energy, so solar, transport infrastructure, home builders, auto parts have been kind of mixed, some very negative, REITs, pretty positive. Look at the ETFs. So Small caps, so the most popular we see is small caps up, mid caps. So again, a rebound in the small and mid caps. So again, broadening of the rally, they'll benefit from rate cuts. And up on the Dow's been quite strong. And in the S&P, we've got mid caps, NASDAQ in general, TQQQ the most popular, QLD next. Under VIX, this is a new Bitcoin 2x leveraged ETF that's been running ads, BTCL. So I haven't put that in our ETF Google Sheet yet because it's very new. But again, if you're looking for a 2x leverage long ETF to play Bitcoin, BTCL is a new ETF that just released with 2x leverage on Bitcoin. YCL is the yen. Again, small caps, Russell in general. Okay, industries, industrials, healthcare, mostly positive. Financials, so pretty much almost all green from Friday, except for basic materials, a little bit of technology. Real estate, very positive. Commodities, silver, again, silver, strong rebound in silver. High yield, government bonds. Okay, next we'll also look at the futures. And just a quick reminder, you can now also trade futures in Webull, and you can get more information about how to trade futures in Webull and their previous offer regarding that. I'm not sure if they're still running that offer, but you can get more information on trading futures in Webull via the link and the topic in our Discord. So again, let me grab a drink and we'll go look at the futures in FinBiz. Okay, so again, we can see the strength in the Dow pretty much at very near its August high, very near its previous all-time high. So again, probably see a retest of that August high, all-time high in the Dow. Again, the Dow's been very strong. S&P not quite making it up to that August high. And again, that's lower than its previous high. So again, we might see a retest of the August high. And again, the NASDAQ weaker. It's got quite a bit of room below the August high. So again, more weakness in the NASDAQ. See that strong resurgence in the Russell. Again, Russell benefits, small caps benefit from rate cuts. And as the probability for a 50 basis point or larger rate cut increases, that benefits the small caps. Again, significant distance from its August high as well. Foreign markets did bounce, but not as strongly as the U.S. markets. So we see Japan, Europe, DAX, again, a little bit of a rebound, but not nearly as strong. VIX degraded back down to below 17. So we had a brief pop over 20 and then very quickly retracing back down. Now, again, in my humble opinion, with going into the Fed interest rate decision, might get a little more volatility, and then we may get significant volatility around that decision. And again, I'll give you my opinions as to whether they go 25 or 50, who that might be good for, who that might be bad for. But in general, I think that might be a source of some potential volatility. We saw retail sales might get a little pop before the Fed interest rate decision, though. I think things will be relatively quiet. A little slow. Everybody's going to be waiting for that decision on Wednesday. So again, we saw oil has been trying to break that resistance at 70. It's getting rejected, just breaking down. So we'll see if it can break that resistance at 70 or if it's going to bounce back down, retest that near 65 level. So we're watching that closely. Again, someone else pointed out that the volatility in oil has been a potential source of profit. So if you see that rejection head down, again, we'll look at ETFs you can use to long or short oil. Natural gas, again, been testing that 240 level. It's been rejecting off of that, bouncing back down. Got pretty good support at 220, resistance at 240. If it breaks that, then could go trend back upward. And we saw that long consolidation in gold. Finally broke that 2550 resistance level, and then we had a strong surge up. So we'll see if that continues. Again, a little bit of a gap up. It was a really strong pop. So we might get some retracement consolidation around that 2600 level. Again, strong bounce in silver all the way up over 31. See if we get a little bit of consolidation around 31. Or if it continues up to 32, so next resistance point would be 32, so we could see a further surge in silver. Again, we'll look at ETFs you can use to long and short silver. Other precious metals also strong, exuberant run, platinum, palladium. Copper not so much, so again, copper really didn't participate in that, and that's kind of interesting. It looks like copper's near its previous high. Again, not as much participation in copper. Again, grain, so corn testing its previous high. Oats, strong run there. Wheat got rejected off that 580 level and then recaptured it and had a strong surge on Friday. We'll talk about this again tomorrow, but we got stopped out on that rejection of that 580 level of the WEAT ETFs that we were long into this trend. So again, congratulations to any of our BeachBum traders that are still in and captured that additional resurgence in wheat. It's now broken above the previous high. So if it does continue to uptrend, it could be a longer term uptrend again. Unfortunately, we've got stopped out when, again, we'll look at that more detail tomorrow. But it looked like it was rejecting off that 580 level and stopped us out, and then turned around on Friday and broke it and surged upward. So in the other commodities, orange juice, strong trend up, coffee. And we see the bonds, again, bonds kind of consolidating just near at above previous high. Again, I don't expect a lot of movement in the bonds until we get the Fed interest rate decision, and then yields should come down, prices should go back up, because I mean, we're going to get a cut. It's just whether it's a 25 basis point or a 50 basis point cut. So again, that should be positive for bond prices. The dollar had regained 101. Did break down. It's now just a little below 101. And then Thursday, Friday, we saw this bounce back up in the yen. So it gapped up and then trending up. So I don't know if that's a futures rollover and or a further unraveling of the yen carry trade. But again, the markets didn't react negatively to that bounce back up in the yen, like we got that kind of panic when the yen carry trade started to unravel back in August. There is I believe there's a Bank of Japan interest rate decision this week as well. but I also saw some news that they already kind of telegraphed that they don't see a need to raise interest rates further at this time. So in my humble opinion, I don't expect the Bank of Japan to raise interest rates this month. And we'll have to see, what do they telegraph? What do they say in terms of future interest rate cuts? That might cause, further unraveling of that yen carry trade. We'll see if that panics the market again, like it did in August. So I don't know if Easy Mike or anyone else has any other further insight into Bank of Japan's interest rate decision and or the yen carry trade. But then again, when we see oscillation in the other foreign currencies, again, that'll might see a strong reaction when we get that Fed interest rate decision. Okay, so given all this information, we're going to jump over and look at our ETFs very quickly. So I've got a couple additions. Just a quick reminder as we come up with trade ideas, when we see some opportunities to long or short, be it an index or a commodity, topic category, then we jump over to our ETFs Google sheet and we can identify a particular ETF with the risk reward profile that we want to use to long or short that trade idea. And you can do likewise, get 24/7 access to our ETFs Google sheet by joining our Patreon. So I've got a couple quick additions that I want to look at. In our research sheet in our ETF Google sheet. So firstly, we had a BeachBum trader, Kaz7344, asked in a comment on our SOXL SOXS video about the Philadelphia Semiconductor Index, the PHLX Semiconductor Index, and was asking where I can trade the Philadelphia Semiconductor Index. So I found this SOXQ, which is a long ETF on the Philadelphia PHLX semiconductor sector industry. So I'll quickly look at the risk reward profile of SOXQ. Okay, and you can do a find in our ETFs Google Sheets, Control F find. Here's SOXQ. So again, it's a long on semiconductors. See, it's got a 52-week range of about 1.9. Shorter term, support at about 34. Gives it about 1.4. Longer term, about 2.8. So if we look at the profile in FinViz for SOXQ, so it's non-leveraged, so it's just a normal on the PHLX semiconductor index. It is optionable, does pay a small dividend. See the volume's not super high, so a little bit choppy. See what it's comprised of. You can see NVIDIA, Broadcom, AMD, Marvel, TI, Analog Devices, Applied Materials. So you can see it's pretty heavily weighted to NVIDIA and Broadcom. So you can compare that in a second. We'll look at the SMH. Actually, we can look at SOXL. So you can see it tracks the investment of the PHLX semiconductor sector index. Again, it's not leveraged. So if you are likewise looking for an ETF to trade the PHLX semiconductor ETF, you might want to look at the SOXQ, see if that's a benefit to you. Let's see if SOXL will show us the composition. So again, the SOX L, SOX S are leveraged on the ICE semiconductor index. So if I go to SOX L in our main page, go to the ETF database, see if it shows me breakdown. So there, if you go to the ETF database for SOX L, and this is the ICE semiconductor index, so see it's a little heavier on Broadcom, less so on NVIDIA, AMD, etc. So you can compare the composition, the holdings for SOX L. Again, SOX L, SOX S, that's leveraged long on semiconductors, leveraged short on semiconductors, and compare that to SOX-Q on the PHLX semiconductor index. So again, based on those holdings, composition, etc., you might be interested in trading the SOX-Q like our BeachBum trader CAS 7344. So if anyone else has any experience with trading SOX-Q, the PHLX semiconductor index, we'd love to hear your feedback in the comments in our Discord, etc. But again, I hope that all helps. Grab a drink, and then we'll also talk about another one I found, which is a leverage long on the uranium sector, URAX. Okay, again, I saw somewhere, I think it was in the main page in FinBiz, this new ETF, URAX, which is a leveraged long on uranium. And I thought that might be useful as well. And we've seen some volatility in uranium. So here's URAX. And we can see it's got a 52-week range at 2.2, shorter term of almost 2. So again, nice risk reward profile. Again, it's a 2x long. Look at the composition in FinBiz. So we can see it's relatively new, come out and looks like June. Yeah, it showed up as a double bottom. So when I saw that, I thought that's interesting. Like to have a 2x long on uranium to play sector rotations in and out of uranium. See, it is optionable. Very low volume though, so might be some liquidity issues. So just be aware of the low volume, potential liquidity issues. Doesn't look like it pays a dividend. Look at the composition. It's got swaps. It's based on the global X. It's essentially URA is the non-leveraged ETF. So we'll go look at the composition of that. So again, global X uranium ETF. We can look at the composition. Let's see what it says in the ETF database. Look at holdings. Again, you can quickly and easily access the holdings. So again, yeah, it's URA. So we'll look at the composition of URA. Again, we have URA in the main page of our ETFs Google Sheet. So you see it's Cameco, Sprotts Physical Uranium Trust, NextGen, UEC, Paladin, DNN, Denison, etc. So again, if you're looking for a leveraged short-term day trading scalping ETF to trade uranium, you might be interested in URAX. And again, you can track it and compare it to some of the other uranium ETFs we have in our ETF database. That one's in the research tab. Again, now since it's relatively new, but again, if you want to trade long uranium, just remember and jump over trade URAX. So I hope that all helps. Okay, let me grab a quick drink. If there's anyone in the chat who has a particular ETF category topic you'd like to look at our ETFs, please throw that up in the chat, and we can take a quick look at those and then get on to our strategy for this week. Okay, so I see a lot of people talking about silver. Let me look at the ETFs we have for silver and gold. So again, find any topic, category, etc. Find a long or short with whatever leverage, risk reward profile, etc. So silver leverage long, we prefer is AGQ, short ZSL. It's also a dividend payer, SLVO. On junior miners, SILJ. So you can find those and track those in our ETFs Google Sheet. Gold, we have a variety, and we've done several videos on comparing the different ETFs to long and short gold. So long GDXU, so leveraged long on gold miners. The short version of that is GDXD. So if you think gold's overextended, going to retrace short term, you can short with GDXD. Dust is, again, we've had several videos on comparing Dust, GDXD. Their composition is slightly different, the leverage, their underlying slightly different. So I would highly recommend you can use the links in our ETFs Google Sheet to look at the composition, see which one you prefer, whether it's on miners, on the futures, etc. So there's gold and silver. Welcome, Tony Roses. Thank you for joining us. We talked about oil. So oil, long gush, or UCO, short drip, or SCO. And again, you want to look at the composition, and we've done some comparison videos on those as well. Tomorrow, we'll be talking about that we're watching USOI. If we do get a retracement in oil this week, down near that 65 area, we're looking to go long a chunk of USOI, which pays a nice monthly dividend long on oil. Again, you can see our other uranium ETFs also in our main ETF sheet. So we have URA, URNM, URNJ for uranium miners. Talked about that yen carry trade. So if you want to play yen long, YCL, short YCS, or also long FXY. Talked about volatility. Again, volatility just is pop very short term and then retrace pretty quickly. And recently we've talked about various ways to short volatility, SVOL, dividend payer versus SVXY versus SVIX. So I'll leave this open if anyone else has another ETF or ETF category. Again, you can find ETFs to long or short in most categories in our ETF Google Sheet. If you don't find it in the main sheet, you can check the research tab. We talked about natural gas briefly, and the longs are oil, UNG, UNO, short cold. Again, those are leveraged, a lot of volatility. We also, again, have individual stock ETFs to long or short, variety of individual stocks. So you can find ETFs to trade long or short, various ETFs in our ETF Google Sheet as well. Okay, let me grab a quick drink and let's talk about how we can make money trading around the Fed interest rate decision. We'll look at the probability for a 25 versus 50, etc. Basis point rate cuts and the current predictions in the Fed rate monitoring tool and also in the CME watch tool. And we have a variety of videos on how you can use these tools to track the probability of various interest rate hikes or cuts as time goes on. Again, you can find links to those videos um, in our notes. Also, we have links to all of these tools in the reference link section under links on our homepage. Again, our homepage is beachbumtrading.com, bum without the U. So if you go to the reference links, you can find a link to the CME FedWatch tool and the Fed rate monitoring tool at any time. So again, you can monitor the probability for various Fed interest rate decisions at any time. As economic data comes out, they always change. So again, we'll take a look at that in a second. Okay, first we'll look at the Fed rate monitor tool, see what it says in terms of the probability of a 25 versus 50 basis point cut on Wednesday. So let's see, we've got a countdown clock. Let's see, 4 days till the decision. And if we look at the September Federal Reserve interest rate decision for this September, you can see right now it's showing a 50-50 chance of a 25 versus 50 basis point cut. Thought it was interesting. So again, 0% chance they're not going to cut. Again, they've been telegraphing that pretty clearly. They want to cut. They're planning to cut. It's just a matter of, the degree and the rate to which they're going to cut. And right now, again, the Fed rate monitor tool says it's a 50-50 chance we'll get a 25 versus 50 basis point cut on Wednesday. It's interesting that that probability was 70% for a 25 basis point cut, 30% for a 50 just last week. So based on just a day ago, again, moved down from 56% down to 50% for a 50 basis point cut. So based on the economic data as it comes out, these probabilities will shift. And again, right now the market's thinking 50-50. Now, again, not financial advice, but my opinion, somebody's going to be disappointed no matter what they do. Again, in my humble opinion, I think they're going to go 25 basis points. I don't see that the data supports the need for a more drastic cut. Job market's not really deteriorating that rapidly. Inflation's still higher than what they would like. So again, in my humble opinion, I think they're going to go 25. Then they can wait and see the effect of that. It'll give them also more time, 2 months, to see the impact and collect more economic data. So I think we'll get a 25. Again, that's my opinion. It's not financial advice. And again, I think somebody in the market's going to be disappointed no matter what they decide. If they only go 25, I think your small caps, your high growth, etc., that we're kind of counting on bigger, faster rate cuts might see a downturn. If we do get a 50, as several commentators are pointing out, I think people are going to wonder what the Fed sees that we don't see, that the economy's worse than what we think. And I think we might get a negative reaction if they go 50. So again, I think this will be a significant source of volatility, not just the decision, but also we get their dot plot, their trajectory. So that will be interesting. Are they going to go slow or steep? And my humble opinion, I think that's almost more important than the initial rate cut. But I think just the fact they're lifting off, starting cuts will be perceived as positive, or at least some sectors in the markets. and some are going to be disappointed, probably that they didn't cut more. So again, that's my opinion for the September rate cut. So in my opinion, be prepared, position your trades, protect your profits, etc. But again, I think it'll be a volatile um, meeting decision, and then what Powell actually says based on their decision, their dot plot going forward. We just quickly look at November and December. So as of November, there's no chance they're just going to do 25. We've got a 25% chance of 50 basis points of cuts, 50% chance of 3 basis points of cuts, and a 24% chance of a whole point, 100 basis points of cuts. Look at December very quickly. So 75, 10%, 100, 35%. Maybe even got 125, 125 basis points is the highest probability, which is ahead of what the Fed has previously said they would cut for this year. So again, the market's pricing in more rate cuts than the Fed has told us so far. So again, potential source of disappointment, and market may react negatively to that. So I hope that all helps. Let's quickly also look at the same thing in the CME FedWatch tool. So again, we've got a countdown clock. We can see that. We can jump between the months. So again, we've got a 50-50 chance of a 25 versus 50 basis point in September. We go to November and got some 50% chance of 75 basis point cut. Only 23% chance of 50 basis points and 27% chance of 100. And for December, 75 basis points, small, 100 basis points, a third, 125. So again, they're pricing in more, and 150 basis points, almost 17%. So again, the market's pricing in significantly more rate cuts than the Fed has told us they're going to do. And again, I think there's a source for potential volatility, disappointment in that. Also, when we get the new dot plot, we'll be able to see their new dot plot in CME FedWatch tool. So again, 2024, their mean projection, was 5. So that's only 250 basis points, 225 basis point cuts. So again, the market's gotten quite a bit ahead of what the Fed's told us in the past, and again, potential source of disappointment, volatility. So again, be prepared, protect your profits, trade accordingly. I hope that all helps. Again, we expect them to start cutting rates. It's just a matter of degree. Again, I've given you my opinion. I think they're only going to go 25 this time. And then I think the dot plot will give us the new trajectory of how many cuts, how soon we think they're going to go going forward. We've talked several times about how to make money trading when the Fed starts cutting rates, and which sectors will benefit from those rate cuts, and how to take advantage of that, how to make money trading. Again, we expect them to start cutting. It's just a matter of how much, how fast. So you can listen to those videos on how to make money trading as they start cutting via the bonus links to those videos in our notes. Also been talking about how to make money trading in 2024 and September 2024, as well as September in general. Talked about the September effect, the late September swoon, etc. So again, be aware of the typical historical seasonality, typical trends in the markets in September, and the end of the summer, and then we'll start talking about trend seasonality effects going into the fall in the very near future. Let me grab a quick drink, and if there's anyone who has any last minute questions, comments, etc., very quickly address those. If I missed your question previously, please throw that back up in the chat. Helen Krantz asks, has AI made any money yet? That's a good question, and that's something to listen for in the earnings and conference calls of the earnings of the AI related companies, is how much are they spending and how much are they actually making. And I think that was part of the source of the disappointment in Adobe's earnings, is they're trying to focus on some of their AI tools, add-ons, etc. And I think they've been disappointed at how they can actually make money with those AI features, tools, etc. So again, listen to their earnings reports, their guidance going forward, and that is a good question. Who other than like Microsoft with Copilot and NVIDIA with their chips, and now we saw Oracle selling data center capacity, who's actually making money with AI. So if anyone else has any further questions, please put them in the comments to this video or any of our videos. If you have any questions, comments, etc. for us, stocks you would like us to take a look at, again, questions you'd like to answer, how we can help you make money trading, how you can succeed in your trading career. Also, again, we'd love to have you join our Discord, actively participate in our Discord. Again, you can ask us any questions in there. We have variety of channels on various trading styles, trading different assets. And you can tag us in the Discord or BeachBum Trading, all lowercase, other characters, numbers, etc. And again, we would not send you friend invites or direct messages without letting you know in advance. Anyone else is a scammer, and please report and ignore them. And again, please let us know, what we can do to improve our weekly trading game plans, any of our tools, our Google Sheets, if you have ETFs, etc. you'd like us to add, or again, anything else we can do to add more value for all of our BeachBum traders. Please let us know. Otherwise, again, tomorrow, we hope you like this content. We hope you'll smash the like button on our videos, help us try to get the algorithm to show us some love, and we'd really appreciate it if you would share our content, repost our content, etc. Share it directly with your fellow traders. Let's continue to build our BeachBum trading community for the mutual benefit of all of our fellow BeachBum traders. So tomorrow we'll take all this data about the September federal interest rate decision, our market strategies, our trading strategies, trade ideas, and we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also talk about how we can use dividend payers and option strategies to make money while we're waiting for our swing trading stocks to set up. So we hope to see you all again 10 a.m. tomorrow, Sundays, for part 2 of our weekly trading game plan for this week. So thank you again to everyone who participated in the live chat, everyone that's watching after the fact, and we hope you have a great day.